Hey everyone, it's Monday morning, November 11th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Çela, and let's talk about the most important events in the days ahead. Before we dive in, a quick reminder, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For personalized investment solutions and high-quality mutual funds, visit amf-capital.de. First up, we're looking at Wednesday's U.S. inflation data for October. After last week's election win, Trump is expected to push forward with policies that could drive inflation higher, especially with potential tariffs and increased spending. Economists are predicting that the Consumer Price Index will show an annual increase of 2.4%, the same as in September. It's worth noting that last month's rise was the smallest in over 3 years, which had bolstered expectations for more Fed rate cuts. But Trump's policies could shift things, and the Fed may need to adjust if inflation heats up. Now, the stock market is coming off a historic rally with the Standard & Poor's 500 hitting an all-time high last week, breaking past the 6,000 mark for the first time. This rally has been fueled by optimism around Trump's tax cuts and plans for looser regulations. However, this week's inflation data will be a crucial test. If inflation starts climbing, it could put the brakes on the Fed's ability to keep cutting rates. So, investors will be watching closely to see if these economic numbers keep supporting the rally. Moving on to the Fed, several Fed officials will be making public appearances this week, starting with Governor Christopher Waller on Tuesday. We'll also hear from Richmond Fed President Thomas Barkin and Philadelphia Fed President Patrick Harker. But after Wednesday's inflation data, the market will be paying extra attention to the Fed speakers lined up, including Chair Jerome Powell on Thursday. His remarks will likely be closely watched for any insight on how the Fed plans to handle potential inflation under Trump's administration. Now, on to crypto news. Bitcoin is hovering just below 80,000, a new record high fueled by expectations that Trump's administration will roll out more crypto-friendly policies. Trump has pledged to make the U.S. a leader in crypto, and his stronger-than-expected position after last week's election is giving the crypto market a serious boost. Bitcoin hit a high of $79,692 overnight Sunday, and investors are excited about the possibility of friendlier regulators and even a strategic Bitcoin stockpile. The Fed's recent comments that its path remains unchanged despite the political landscape has also added to the positive momentum in crypto. Finally, let's look at oil. Prices dropped on Friday, with U.S. crude settling around $70 per barrel after China's latest stimulus measures didn't impress energy traders. But despite that slip, oil prices still ended the week higher. Traders are anticipating tighter sanctions on Iran and Venezuela under Trump, which could cut global supply. Plus, last week's Fed rate cut tends to support energy demand, as rate cuts generally boost economic activity. So while there's some short-term volatility, there's still a lot of support for oil. And that wraps up this week's Capital Markets Quickie. We've got inflation data, Fed commentary, Bitcoin on a tear, and plenty of action in oil. Thanks for listening. I'm Endrit Çela, and I'll see you next time. Have a great week, everyone.